Billionaires think about money completely differently than you do. Not slightly differently, completely differently. And their thinking is counterintuitive, paradoxical. Sometimes it seems backwards, but it's precisely this different thinking that created their billions. I've studied how billionaires actually think about cash. Not what they say in interviews, how they actually think. Their mental models, their frameworks, their relationship with money. And I discovered something shocking. Billionaires barely think about money at all. At least not the way normal people do. They think about something else entirely. And that something else generates billions. Today I'm going to reveal exactly how billionaires think about cash. Their actual mental frameworks, not inspirational quotes, not surface-level advice. The deep cognitive patterns that separate billionaire thinking from everyone else. By the end of this video, you'll understand why billionaires make the financial decisions they make. And more importantly, you'll know how to adopt their mental models starting today. Because here's the truth. You don't need $1 billion to think like a billionaire. You can adopt their thinking right now, and that thinking will transform your financial trajectory. Let's decode how billionaires actually think about cash. Here's the first fundamental difference in how billionaires think. They don't think about cash as the goal. They think about cash as a tool. Normal people think, I want more money. The end. That's the goal. Get money. Have money. Keep money. Billionaires think, I want to build something. What tools do I need? Cash is one tool among many. Here's why this difference is massive. When cash is the goal, you optimize for accumulating cash. You save it, you protect it, you're afraid to lose it. When cash is a tool, you optimize for using the tool effectively. You deploy it, you invest it, you're willing to risk it if the return justifies the risk. Let me show you how this plays out. Scenario: $100,000 in the bank. Normal thinking: I have $100,000. I need to protect this. Keep it safe. Maybe earn 4% interest. Billionaire thinking: I have a $100,000 tool. What can this tool build? What return can I generate? How can I multiply this tool? Scenario: business opportunity requiring investment. Normal thinking: this requires $50,000. That's a lot of money. What if I lose it? Focus. The cash itself. Billionaire thinking: this requires $50,000 tool deployment. What's the expected return? What's the risk-adjusted opportunity cost? Focus. The return on the tool. Scenario: monthly income. Normal thinking: I earned $10,000 this month. I should save most of it. Goal: accumulate cash. Billionaire thinking: I earned $10,000. How much should I deploy into growth? How much into stability? Goal: optimal tool allocation. The mental model is completely different. One treats money as the end goal. One treats money as a means to an end. And this changes everything. Here's what happens with each mindset. Cash as goal. Mindset: optimize for safety over growth. Fear of losing money prevents big opportunities. Money sits idle, earning minimal returns. Focus on accumulation, not multiplication. Result: slow wealth building, high safety. Cash as tool mindset: optimize for highest risk-adjusted return. Strategic risk-taking for asymmetric upside. Money constantly deployed for maximum return. Focus on multiplication, not accumulation. Result: exponential wealth. Building calculated risk. Both mindsets can build wealth. But one builds it linearly, one builds it exponentially. Billionaires universally have the tool mindset. They're asking, What's the best use of this tool right now? Not, how can I keep this money safe? This is why billionaires often have relatively low cash positions. Their cash is constantly deployed, working, building, multiplying. Normal people often have high cash positions. Their cash sits idle, safe, not working. Both are valid strategies, but only one creates billions. The second fundamental difference: billionaires think in equity, not salary. Normal people think, how can I earn more per year? Income, salary, hourly rate, annual compensation. Billionaires think, how can I build equity that appreciates? Ownership, assets, appreciating value. Here's why this is critical. Salary is linear. Work more hours, earn more money. There's a ceiling. Equity is exponential. Build valuable assets. They appreciate regardless of your hours. There's no ceiling. Let me prove this with math. Salary thinking. Year 1. Earn $100,000 working 2,000 hours. Year 10. Earn $150,000 working 2,000 hours after raises. Year 20. Earn $200,000 working 2,000 hours. Total wealth built. Maybe $1 to $2 million in savings, just retirement. Equity thinking. Year 1. Earn $60,000 salary plus build 10% equity in company. Year 10. Company worth $10 million. Your equity worth $1 million. Year 20. Company worth $100 million. Your equity worth $10 million. Total wealth built, $10 million. Plus, regardless of hours worked in years, 15 to 20. The difference is exponential versus linear. Here's how billionaires think about this practically. Career decision, normal thinking. Job A pays $150,000. Job B pays $120,000. I'll take Job A. Decision criteria. Salary. Billionaire thinking. Job A pays $150,000, no equity. Job B pays $120,000 with 1% equity in high-growth startup. What's the expected value of that equity? Decision criteria. Total compensation, including equity upside. Business decision, normal thinking. This service business generates $500,000 profit per year. That's great income. Focus. Annual profit is income. Billionaire thinking. This service business generates $500,000 profit. What's the equity value? Can I sell it for $5 million? Can I scale it to $10 million value? Focus. Equity value and appreciation potential. Investment decision. Normal thinking. This bond pays 5% per year. Reliable income. Focus. Income generation. Billionaire thinking. This stock could appreciate 500% over 10 years. The equity value compounds. Focus. Equity appreciation. Every billionaire built wealth through equity. Bezos. Amazon equity, not Amazon salary. Musk. Tesla/SpaceX equity, not salary. Gates. Microsoft equity, not Microsoft salary. Zuckerberg. Facebook equity, not Facebook salary. Buffett. Berkshire equity, not investment fees. The pattern is universal. No billionaire earned $1 billion through salary, zero. All earned it through equity appreciation. Here's the practical application. If you're optimizing for salary, you'll never build billion-dollar wealth. The math doesn't work. You need to optimize for building or acquiring equity that appreciates. This means start businesses you own equity in. Join companies with meaningful equity compensation. Buy appreciating assets, real estate, stocks, businesses. Build intellectual property you own. The mental shift is, how can I build equity? Not how can I earn more salary? This doesn't mean salary is irrelevant, but billionaires view salary as the funding mechanism for building equity, not as the wealth-building mechanism itself. The third fundamental difference: billionaires don't think about what things cost. They think about opportunity cost. Normal people ask, "Can I afford this? What's the price? Is this expensive?" Billionaires ask, "What's the opportunity cost? What am I giving up by choosing this? What else could I do with these resources?" Completely different questions. Let me show you how this operates. Decision: buy a $100,000 car. Normal thinking: can I afford $100,000? That's expensive. But I have the money. I'll buy it. Analysis: price versus bank account balance. Billionaire thinking: opportunity cost of $100,000 in depreciating asset. $100,000 invested at 10% becomes $260,000 in 10 years. This car will be worth $40,000 in 10 years. Net opportunity cost, $220,000. Analysis: what you're giving up by choosing this option. Decision: take a $200,000 salary job. Normal thinking: $200,000 is a lot of money. Great salary. I'll take it. Analysis: absolute salary amount. Billionaire thinking: opportunity cost. If I take this job, I can't work on my startup. Startup has 5% chance of $50 million exit. Expected value: $2.5 million over 5 years. Salary over 5 years: $1 million. Opportunity cost of job: $1.5 million expected value. Analysis: what you're giving up. Decision: spend 10 hours on a task. Normal thinking: this needs to be done. I'll do it myself. Analysis: task completion. Billionaire thinking: opportunity cost. 10 hours at my effective rate of $500 per hour is $5,000 of value I could create. Someone else can do this for $200. Opportunity cost of doing it myself: $4,800. Analysis: alternative uses of time. This opportunity cost thinking changes every decision. Here's why it's powerful. When you think about price, you optimize for cheap. When you think about opportunity cost, you optimize for best use of resources. Price thinking: spend time to save money, low hourly value. Buy cheap but inefficient tools. Optimize for lowest cash outlay. Result: save money, lose time. Opportunity. Opportunity cost thinking: spend money to save time, high hourly value. Buy expensive but efficient tools. Optimize for highest return on resources. Result: deploy resources for maximum return. Here's a concrete example. You need a website. Option A: do it yourself. Cost: $0. Time: 40 hours. Option B: hire expert. Cost: $5,000. Time: 5 hours of your oversight. Price thinking: option A is free. I'll do it myself. Saves $5,000 cash. Opportunity cost thinking: option A costs 40 hours. My time creates $200 per hour of value. Real cost: $8,000 of opportunity. Option B costs $5,000 plus 5 hours, $1,000. Real cost: $6,000 total. Option B is cheaper. Saves $2,000 of opportunity cost. Billionaires always calculate the full opportunity cost, not just the cash price. This is why billionaires often spend money in ways that seem wasteful to normal people. Private jets, expensive assistants, premium everything. But they're not wasteful. They're optimizing for opportunity cost. A billionaire's time might be worth $10,000 per hour. Commercial flight wastes 3 hours. Opportunity cost: $30,000. Private jet costs $20,000. Net savings: $10,000. The decision is obvious when you measure opportunity cost. The practical application: start calculating opportunity cost on everything. If I do this, what am I not doing? What's the highest value use of my time right now? What's the highest return use of this money? This thinking will transform your resource allocation. And resource allocation determines wealth building. The fourth fundamental difference: billionaires believe money is infinite. Normal people believe money is scarce. Normal people think, there's only so much money. If someone else gets it, there's less for me. I need to protect what I have. Scarcity mindset. Zero-sum thinking. Billionaires think money is created every day. The economy grows. Value creation generates new money. There's unlimited money available. Abundance mindset. Positive sum thinking. This isn't naive optimism, it's economic reality. The global economy grows. New wealth is created daily. Money supply expands. But the mindsets create different behaviors. Scarcity. Mindset behaviors. Hoard cash out of fear. Avoid risk even when risk-adjusted return is positive. See others' success as your loss. Compete instead of collaborate. Optimize for protecting what you have. Abundance mindset behaviors. Deploy cash to create more cash. Take calculated risk with asymmetric upside. See others' success as proof of possibility. Collaborate to create more value. Optimize for multiplying what you have. Let me show you how this plays out. Situation: successful competitor. Scarcity thinking: they're taking market share. There's less for me. I'm threatened. Response: fear, defensiveness, competition. Abundance thinking: they proved the market is valuable. There's room for multiple winners. What can I learn? Response: curiosity, learning, collaboration. Situation: investment opportunity. Scarcity thinking: I only have $50,000. If I invest and lose it, it's gone forever. Response: excessive caution, paralysis. Abundance thinking: I have $50,000 tool. If deployed wisely, it can become $500,000. I can always create more money. Response: calculated risk-taking. Situation: someone asked for advice. Scarcity thinking: if I share what I know, they might compete with me. Response: hoarding information. Abundance thinking: if I share knowledge, they might become a future partner or create opportunities. Response: generous sharing. Here's what's critical. Both mindsets are self-fulfilling. If you believe money is scarce, you act defensively. Defensive actions limit growth. Limited growth confirms scarcity. If you believe money is abundant, you act expansively. Expansive actions create growth. Growth confirms abundance. Billionaires universally have abundance mindset. Not because they're wealthy. They became wealthy because they had abundance mindset. The abundance mindset enabled the risk-taking and value creation that built billions. Here's the practical shift. When you think about money, ask, is this a scarcity-based thought or abundance-based thought? Scarcity: I can't afford to lose this money. Abundance: how can I deploy this to create more? Scarcity: they're succeeding at my expense. Abundance: their success proves it's possible. Scarcity: I need to protect what I have. Abundance: how can I multiply what I have? The abundance mindset doesn't mean being reckless. It means believing that value creation generates money, and you can always create value. Therefore, you can always create money. This belief enables billion-dollar thinking. Here's what matters right now. Billionaires think about money differently in 4 fundamental ways. They see cash as a tool, not the goal. They think in equity, not salary. They measure opportunity cost, not price. They see money as infinite, not scarce. You can adopt these mental models starting today. Here's the protocol. Week 1 to 2, awareness audit your current money thoughts. Write down every financial decision you make. Categorize each decision. Is this cash as goal or cash as tool thinking? Is this salary or equity thinking? Is this price or opportunity cost thinking? Is this scarcity or abundance thinking? Build awareness of your default patterns. Week 3 to 4, reframe practice. Reframing every financial thought. I want to make more money. I want to build equity that appreciates. This costs $500. This has opportunity cost of what I'm giving up. I can't afford this. What's the highest return use of my capital? Someone else's success threatens me. Their success proves it's possible. Practice the reframe 10 times daily minimum. Week 5 to 8. Implement. Make one decision weekly using Billionaire Framework. Deploy some safe cash into a calculated opportunity. Cash as tool. Choose an equity building option over a salary increase. Equity thinking. Calculate full opportunity cost before a major purchase. Opportunity cost. Collaborate with someone instead of competing. Abundance mindset. Each implementation reinforces the new mental model. Week 9 to 12. Evaluate after 90 days. Evaluate outcomes. Did deploying cash as tool generate returns? Did equity thinking create more wealth than salary thinking? Did opportunity cost decisions optimize resources? Did abundance mindset create new opportunities? Evidence will reinforce billionaire thinking patterns. The daily practice. Every financial decision, ask these 4 questions. 1. How is this cash tool best deployed? Not, can I afford this? 2. Does this build equity? Not, what's the salary income? 3. What's the opportunity cost? Not, what's the price? 4. How can I create more value? Not, how do I protect what I have? These 4 questions will rewire your money mindset, not overnight, but progressively. Within 90 days, you'll think about money differently. Within a year, your financial decisions will be unrecognizable. Within a decade, your wealth will reflect billionaire thinking patterns. You don't need $1 billion to think like a billionaire. You just need to adopt their mental models, starting today, right now. That's how billionaires actually think about cash. And now you can think the same way.